Sometimes incredible value presents itself in the stock market. There's a value stock right now that also happens to be a dividend stock that also happens to be, quite frankly, a growth stock that is on sale. This is a stock that is truly on sale. There's a buying opportunity right now, in my personal opinion. It fell 16% today, and it may become position number 41 in my dividend stock portfolio. That's right, I may be adding this position as a net new position in my dividend stock portfolio. So I want to discuss this stock today. I want to talk about all the pros and cons, all the history I have with this company, but also I just want to let you know I'm speaking a little bit softly today because it's late at night and I'm in a hotel room actually traveling for business. I'm chilling at the Holiday Inn just like my man Chingy. Anyways, I got to speak a little bit softly because I don't want to get in trouble here at the hotel. The walls are thin and such and wake up other customers here at the hotel. Anyways, I want to talk about AbbVie today. That is the stock I'm talking about, ticker symbol ABBV, down 16% in a single day, starting dividend yield of 6.51% right now, has a great history of raising the dividend. Let's talk about AbbVie. This is going to be so exciting for today's dividend stock video. All right, everyone. I did my best to throw this video together. Literally, it's 10:30 at night. I've been up since 7:30. Been a busy day, a lot of driving today. But I just couldn't miss this opportunity. AbbVie is down 16% in a single day. And this is because of the announcement that they are going to acquire and merge with a company called Allergan PLC. Anyways, we're going to talk about that merger in a bit, but basically AbbVie, for those that don't know, it's a pharmaceutical company. It's a dividend growth stock. It's actually used to be part of Abbott Labs, but Abbott Labs and AbbVie split ways a few years ago, and AbbVie is a pure play pharmaceutical company. They're most well known for their drug Humira, which is actually the largest blockbuster drug in terms of revenue right now out of any drug that is being sold on the market. And so AbbVie is very dependent on Humira. When I reviewed this stock on my YouTube channel back in 2018, and at that time I pointed out that, hey, I'm kind of concerned about this company because one, it seemed like the dividend yield, the starting dividend yield wasn't high enough for me. I wanted it to be closer to the 7% range. And also I was very concerned that, hey, they're really tied to Humira. And Humira, an arthritis drug, this drug is going to, the patent period is going to expire in 2023. And so just a few years away, some of these generics can start coming up and they can steal market share away from AbbVie. That being said, AbbVie already has agreements in place with some of these companies where they're actually going to get royalty payments from some of them. And so we're going to talk more about that in a minute. I don't think the patent expiration is quite so horrible as I originally thought, because AbbVie has been doing a lot of good work to negotiate with other companies. But nonetheless, when that patent does expire in 2023, these guys are just so freaking exposed to Humira. It's just no doubt about it. And we'll get to that in the numbers today. That actually it's 61% of AbbVie's revenue based on their earnings report, their annual report from 2018. So 61% of the revenue is coming from that single drug. And so quite frankly, why are they merging or why are they acquiring Allergan? Quite frankly, because they see this coming. They see that they're dependent on a single drug, and it accounts for a lot of their portfolio, and the patent period is expiring. And so why not merge with another company, diversify a bit, get the pipeline, the drug pipeline of the other company, combine it with theirs, diversify things, and mitigate risk. On this news, AbbVie tanked. And I love this because typically when any kind of big acquisition happens, the company making the acquisition goes down, the company being acquired goes up. In this case, AbbVie was punished, just down 16%. And this is after it was already trending down. Just earlier this year, or actually in the last 52 weeks, it was trading as high as $100. AbbVie is now down at $65 range. So it's way, way down. And it's becoming very interesting to me right now for a few reasons. We're going to get into those. But quite frankly, because of the merger, they're going to be more well diversified. And I really like the starting dividend yield now that the thing has plummeted. And I like to take advantage of a good value in the market. And so I want to basically talk today. I'm going to start at a high level with some of the pros and the cons, and then I'm going to get into some of the detailed numbers. I do apologize if this video is less polished than my others, because quite frankly, I am just trying to film this thing late at night here, bootstrapping it on my business trip, and I actually was hoping to bring my microphone, and I forgot that, but I'm doing my best here. So anyways, let's jump into it. What do I like about this? One thing that I like off the bat is with the merged company, AbbVie and Allergan, the actual dependence on Humira, it goes down. It goes down to about 41% of the revenue of the combined company. How did I come up with that? I looked at the annual report for AbbVie and for Allergan. Both actually of the annual reports were denominated in US dollars. Even though Allergan is an Irish company, they do most of their sales in the US. Their biggest blockbuster is Botox. And so they denominate their earnings in US dollars in their annual report. So it was easy to do an apples to apples comparison. And when I combine the two revenues of the companies from 2018, and then I look at what does Humira make of the overall pie, it drops down to 41%. So they still have huge exposure there, but it's a lot better than the previous 61%. So really happy to see that. One of the other things that I like is when I just looked at Allergan's portfolio, I looked at their annual report, I look at all of the drugs that they sell. Yeah, they have some concentration with Botox, but quite frankly, it's much more diversified than AbbVie's portfolio. And so you combine that portfolio with AbbVie, and you combine the two pipelines, this is going to make a powerhouse of a pharmaceutical company, and it's going to be a well-diversified pharmaceutical company. So I like that a lot. I like the fact, we'll get more into this later, the stock is priced as if it's going to go out of business. So I'm just looking at AbbVie now, but I did an analysis. I just looked, hey, AbbVie at 65 bucks, and I looked at what do the analysts think the company is going to earn this year. I take the 65, I divide it by that analyst consensus estimate. The PE now forward, just on AbbVie for 2019, comes out to a 7.49. 7.49. 7.49 is basically as if AbbVie is priced as if it's going out of business. As a value investor, a dividend investor, I cannot ignore that. 7.49, that's going to have a place in my portfolio. Hey, with a dependence on Humira at 41%, let's say they lose half their Humira sales at a PE of 7.49. I am loving that. So the dividend yield, the starting dividend yield now is a 6.51% on AbbVie, and I think that will grow over time. We'll get more to this later, but they have a rich history of growing the dividend at AbbVie, and I think they will at the combined company. And we'll get more to this later, but I looked at the revenue and cash flow for AbbVie in particular, but I actually looked at both companies, but AbbVie in particular, revenue and cash flow growth was really strong. And so it's nice to see that, because these days a lot of companies, they aren't having the cash flow growth, but AbbVie does. So I was really happy to see that. Now, what don't I like? This merged company is going to have a lot of debt. This acquisition, both companies already have some debt associated with them, and then AbbVie is going to finance the acquisition through issuing stock and through debt. So you're going to have more debt now being issued. It's going to be a lot of debt. Now, that being said, I don't think that the debt is the end of the world. Interest rates are low. They'll probably continue to be low. The reason they'll probably continue to be low is the risk. We're kind of in a conundrum now. The Federal Reserve, they run risk of really damaging our economy by raising interest rates, because the amount of debt that has been taken out by corporations is at such excessive levels that by raising the debt, they know they're going to really hurt the economy. So they're kind of in a position where they can't really raise the interest rate. I'm not saying this is good. I think this is indicative of a bigger problem. And the next big crash very well could be because of this excessive debt. That being said, at the same time, in the short run at least, I don't see interest rates going up. Hopefully they have enough time to pay down some of this debt before the big crash comes. We will see, but that's a risk. One thing that I don't like is both companies are US centric, and so most of the sales for both Allergan and AbbVie are US centric, so the combined company will be very US focused. That is risky because the US healthcare system overall is kind of broken, and so a lot of people don't like these drug companies because they argue that the cost of the drugs is really high. Humira, for example, they raised the price of the drug year over year, so the costs are really expensive for the healthcare system. And a lot of people argue that the system's broken, that these companies shouldn't make the kind of money they make. I'm not going to take any sides politically speaking, but having that kind of exposure to the US and having that kind of exposure to a system that's kind of broken and needs to be fixed puts the company a little bit at risk. Now, another thing worth mentioning is the 2023 patent expiration on Humira. That's something I don't like. I also don't like that Allergan has been losing money in recent years. In 2019, they're forecasted to make some good amount of money, but in the last few years, when I look at the annual report, they're actually losing money. So something to keep in mind. Now, these are just some of the high-level overviews here, what I like, what I don't like. I want to dig into some of the specifics now. I'm kind of toggling between stuff here. I actually have my laptop in front of me, so I'm going through everything here that I wrote down earlier. Again, this is a little bit more of a haphazard video, and I hope this is coming across okay because I'm trying to speak just a little softer than normal. Anyways, we're doing our best. We're chilling at the Holiday Inn, just like Chingy, so we gotta make this go. So anyways, AbbVie right now, they pay $1.07 per quarter. And so if I multiply that by 4, the dividend per year now is 4.28. I take the 4.28, I divide by the share price of $65.79. The starting yield is a 6.51%. This is right around, I'll round it up to 7. This is target buying opportunity for me. This is what I said. I said this last year. I'm not going to buy AbbVie unless it goes on deep discount fire sale. This is a fire sale now. Now, because I'm traveling, I'm not in a position to buy the stock right now. And so what the caveat here is if it holds low for a while here, I will buy it. I'll buy it back when I'm home, probably around the time when you're watching this video. And I will probably buy it, quite frankly, in a way where I do a lump sum up front, but then I average in monthly. And so I hope this thing stays low for a while. That'd be really good. The dividend. If I look at the 5-year period, they've been just raising it so quickly. The compound annual growth rate for the dividend, the average amount they've been raising the dividend each year is at 21.75% last 5 years. Now, even the most recent increase, by the way, last 5 years, it went from 40 cents a quarter to $1.07 a quarter. Just fabulous. The most recent increase in January of 2019 was 11.46%. So just this year, they raised it 11.46%. They raised it from 96 cents a quarter to $1.07. So what's not to like as a dividend investor? These guys are rewarding us with cash flow. And I need cash flow right now. I want more current yield, more current cash flow. And quite frankly, AbbVie, it's kind of like a, I'd say Altria in some ways. In that Altria, it's one of these sin stocks that yields really high right now, but they're also growing the dividend. That's how AbbVie is. It's priced as if it's going out of business. It's yielding a lot, but they're growing. They're growing quickly, and we'll get to that in a minute. So it's really cool. It's actually growing a lot quicker than Altria. So it's one of these stocks that might just be the sweet spot where, look, it's calculated risk for sure. I'm taking on risk with this guy. It's not going to be top 10, top 20 position for me by any means, but it could add quite some growth to the portfolio in terms of just everything, in terms of capital appreciation, in terms of dividend growth, cash flow growth. This is an interesting one where it's, you know, there's two types of dividend stocks historically. There's those that yield really low but are growing quickly and are growing the dividend quickly. And then there's those that are high yielders, but they're growing the dividend slow and the company is growing slow. This company, AbbVie, I believe it's in the middle. It carries some risk, but look, dividends, current dividends real high, but they're growing the dividend quickly and the company is growing quickly. And I think the combined company will do real well. So anyways, I want to move on. So consensus estimate in terms of earnings this year in 2019 is $8.78. That's the average. And so if I take that and I take the share price, I divide by that, I get a PE a forward PE 2019 of 7.49, so real good value. Also worth noting, the payout ratio based on that consensus estimate comes out at a 49%. So what's cool is this company is paying out of 2019 earnings less than half. So the payout ratio is good. So they could raise the dividend more. I love this thing. Anyways, I want to move on now, talk about some more stuff. So Allergan is an Irish company. They are best known for Botox. Basically, AbbVie will be paying $63 billion for them. So huge acquisition. And they're dealing with the Humira patent expiration in 2023, so that's why they're doing this. Now, AbbVie, the way they're going to finance this is they're going to pay for each share of Allergan, they're going to pay 0.8666 or 0.866 shares of AbbVie, and they're going to pay $120.30 in cash. So basically, there's a combination of stock being given and cash. And cash, quite frankly, it's probably going to be debt, more debt. And so anyways, they're valuing this whole thing at $188 and change per share for the Allergan acquisition. And so anyways, I look at this and I'm looking, okay, they're going to pay 120.30 in cash, and I took that as a percentage of the 188. And that comes out to about 64% of the deal is being financed for cash. And so anyways, if 64% of the deal is being financed for cash and the deal is valued at $63 billion, that means $40 billion of the deal is going to be cash. And so the way I look at this is, look, these guys are basically going to take cash probably out of whatever current cash assets they have, but they're also going to go to the debt market and they're going to be raising debt. And so debt for the combined company, for AbbVie making the acquisition, it's going to go up by $40 billion. And so this is huge. This is just huge amount of debt, huge amount of cash being paid. And so that's something as investors we have to watch out for. If there's one thing that's kind of a big downside with this deal, and I think the reason Wall Street doesn't like it and the stock plummeted today, AbbVie, is because one, probably the price they're paying, but I think the price is actually fair. We'll get to that later. The forward PE, or the PE even at purchase price of Allergan at the 188 a share, it's reasonable. The thing I think Wall Street doesn't like is the cash, or the debt, the cash being paid, aka the debt that AbbVie is taking on. It's just massive and it puts it at risk. Look, if interest rates go up and they have to refinance the debt, oh my goodness, that's going to be a headache. But like I said earlier, I don't know if interest rates are going to go up too much in recent years, and hopefully they can start paying this thing down quickly. And look, I think the pros outweigh the cons. The pros here being that you go from a company that is so weighted on Humira to one that is only 41% weighted on Humira. That's a lot better. So one thing worth noting is Humira actually, generics started being sold for it in Europe already. Now, sales of Humira, my understanding, based on one of the news releases I read, are down in the first quarter of this year, 2019, even though sales in the US are climbing. And so global sales are down 23% in the first quarter of this year. And so this just, I don't know if what I read here is 100% accurate, but the gist that I get is there's already leading indicators, because these numbers, this seems like too pronounced. But anyways, the leading indicators, to me, what it shows is when the patent expires, there is downside risk, for sure, on sales of Humira going downhill and people going to other alternatives. Anyways, we'll talk about this more in the future, later in the video. I know I'm skipping around here, but like I said, I'm doing my best to get this guy to you guys in real time. So next what I did is I looked at the AbbVie annual report 2018. And I just started looking at the metrics. And so I know I'm jumping around a bit in today's video. Hang with me here, a lot of good data to share. Anyways, I looked at revenue, and the annual report kind of shows 2014, 15, 16, 17, and 18. So it shows 5 consecutive years. And when I look at the compound annual growth rate, 2018 versus 14, so 4 years compound annual growth rate, revenue is up on average 13% per year. So This company, 13% compounded on revenue, that's phenomenal. That's huge, 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 huge revenue growth. And so keep in mind that this is a growth company, they're growing revenue quickly. Earnings, net earnings have grown actually 34% on average per year over that 4-year period. Now, the challenge with earnings is there was something big between 2014 and 15 where it just jumped. And so if I look at just the 3-year comps, I look at 18 versus 15, I get a 3% compound annual growth rate on average for earnings. So earnings aren't growing quite as quickly when I look at the data kind of in a more realistic way. Net margins for the company are pretty good. They're around 17%. I actually would have expected them to be higher, but that's where they're coming out. What's interesting is they're actually going to jump. They're going to jump this year because what's funny is the earnings per share. This is why these companies are actually a little difficult to analyze. I'd be curious. Put in the comments below if you're an expert on this pharmaceutical industry, especially on AbbVie and Allergan and what's going on. Because when I look at AbbVie, I look at the diluted earnings for 2018. They come out to $3.66 per share. But for 2019, the consensus estimate is $8.78. So something is happening 2018 versus 19 where earnings are skyrocketing. And so it just doesn't add up to me. Why are earnings jumping so much? Earnings per share just jumping so much 2019 versus 2018. That's something that I'm seeing here. It's just real interesting, but something must be going on. Long-term debt has been pretty much, right now it's about 36.6 billion. And so we're talking about another 40 billion added to that to make this Allergan purchase. That is why shares of AbbVie are down. It's just the debt is going to more than double, potentially, or at least somewhere around that. I don't know what they're going to finance from cash on hand versus net new debt, but that's happening. And so the long-term debt, though, it's been pretty consistent. It jumped between 2014 and 15, but 18 versus 14, it's up on average per year by 5%. So it's growing compound annual growth rate of 5% on the debt, long-term debt. Cash flows are just doing really well. So cash flows in 2016 were $7 billion. Cash flows in 2018 were $13.4 billion. And so you can just see here a picture where cash flow is just skyrocketing. And so I really like that about AbbVie. So what I know I'm jumping around, but the way I kind of did my analysis here is I looked at AbbVie first, and then I looked at Allergan, and then I kind of put it all together. But what I'm sharing with you here is kind of in reverse order. I shared first putting it all together. Now I've shared just some specifics that I found on AbbVie and why I like AbbVie, but I will get to Allergan next. Anyways, more with AbbVie. When I look at 2018, US versus international, 66% of revenue comes from US. So like I said, they're real focused on the US, and Humira is at 61% of the revenue. Now, the revenue just keeps growing. It's the world's biggest drug. So there's these biosimilar drugs that are going to be introduced in 2023. These are, to my knowledge, what are referred to as generics or similar drugs. They achieve the similar result of Humira. One of them is coming from Samsung. They actually started selling this in the EU last October in 2018. And another one is coming from another company, but I did not. Amgen. Amgen is the other company that's going to have a biosimilar. Now, what is interesting is AbbVie, they're really good at this legal stuff. So they went and my understanding is they sued Samsung and Amgen, and they arrived at some kind of settlement where Samsung and Amgen, they're going to pay royalties to Humira for sales of the biosimilar to AbbVie. And so even though the patent is expiring in 2023, these are newer developments. It's nice to see that even if a consumer goes and chooses the biosimilar, some of those royalties are still going to come back to AbbVie. So that was really cool to see. I think one of my subscribers pointed this out to me a few months ago, and it's nice just to hear it from the subscriber. I love you guys. And also to research a bit and see that in writing is really interesting. Now, one thing worth being that's just interested is AbbVie is being sued as well for protecting Humira so well. So they've been so good at this patent thing, at these legal things, that the way they've gone about orchestrating this this protection of Humira, it's through all these patents, related patents. They're being sued for quote unquote taking advantage of the system, of the patent system, etc. And so the way I look at it is these companies, there's always something like that going on. This is an industry where it probably pays to have a good legal team. It's not something that concerns me. What I take more out of this is positivity. I take the fact that they're going to get royalties from Samsung and Amgen as a pure positivity. I like that. That's a positive development. Now, AbbVie, there was a 9.7% price hike in 2018. So this is what I'm saying. The price of these drugs is already expensive and it's going up quickly. And a lot of people out there, politicians, they don't like these pharmaceutical companies for that reason. And I think that creates risk because some people are saying that, you know, these companies are at fault of the broken system. And, you know, you get a government that is perhaps more liberal and they want to attack or go after these enterprises. That creates risks for shareholders like you and me. I'll give a similar example in a different industry. Sin stocks, we talked about Altria earlier. There was a master settlement agreement back in 1998, and the states went against Altria and other sin stocks for the fact that they created healthcare issues, and they won a landmark case, a ton of money, huge. Check out my last video, I'll link in the description below. Unbelievable amount of money. And so what I'm saying is it's not unprecedented. They already did this to sin stocks. Now sin stocks, they continue to thrive because they are thug life, they're OGs, they're chilling at the Holiday Inn too. Anyways, the question becomes, does AbbVie and the other leaders in the pharma space have what it takes to do that same battle? Because I see that battle potentially coming. Now, I already own some other stocks like J&J and Pfizer, for example, that are in the same space. J&J is my #1 favorite stock of all time. And so, anyways, I think that's just something that we're going to have to live with as investors in the pharma space. But it's something certainly that I keep top of mind. And quite frankly, there's stuff that can just go crazy in the pharma space. It's one of those things kind of like the oil space where I think it's good to be diversified. So this is another reason back of mind that I've always thought, look, I have J&J, I have Pfizer, pick up AbbVie. Now that it's combined with Allergan, sure, I'm going to go for it. Like it. Okay. So now what I did is I went into Allergan's, I hope I'm pronouncing their name right, I'm not very familiar with this company, but I went into their annual report, I looked at revenue. I didn't do the compound annual growth rate here, but revenue, it's climbing, it looks good. 2018 it was 15.78 billion, 2014 was 4.6 billion. 2015 was 12.688 billion. So again, they had something weird between 2014 and 15, they had this hyper growth, 15 through 18, been growth, but a little more steady. Needless to say, I'm happy with Allergan. Their revenue is growing great. Now, in terms of earnings, so far they've been losing money each year, and so that's something that concerns me. But from a consensus estimate standpoint, they're expected to make good money in 2019. So it's just a weird thing. I don't know why they've been losing. Now all of a sudden they're making a ton of money. But that's what the analysts tell me. I generally think they're right. They're pretty good at predicting these earnings, you know, plus or minus. Anyways, they've got some debt. They've got 23.79 billion in debt. And so that's debt. So we know that AbbVie's got debt. We know Allergan's got debt. We know AbbVie's taking out debt to buy Allergan. And so this is just something worth noting as well. We got lots of debt. Allergan US is even more skewed. It's funny, it's an Irish company, but they're real skewed US. 77.8% of their sales are in the US. A lot less international than I'd like. So they started paying a meaningful dividend in 2017, and they've been raising it. And so not as quickly as AbbVie, but they have a history of raising the dividend. And so my belief is the combined company, look, it's going to be probably continue to be a dividend powerhouse. And so that's good. I'd like to see that. Before the price run up, Allergan's dividend yield was about 2%, so 2% range, and so not as exciting as AbbVie's, but they pay a dividend and they've been raising it. So the consensus estimate for Allergan for 2019 is $16.64 in terms of earnings. By the way, someone was asking me, Ian, how do you pull these consensus estimate? What I do is I go to Yahoo Finance, I click the analysis tab, and then I look at the average estimate for the current year. And there's all these analysts following it. That's the average. Anyways, the current share price after the run-up today is $162.48. On that price, the PE right now on Allergan is a 9.76, but AbbVie is going to buy it out if it goes through for a total price of $188.24. So I take the 188, I divide by the consensus estimate of the 16.64, I get a PE that AbbVie is paying of 11. I don't think that's a bad deal. And so AbbVie, I don't think they're overpaying here. They're paying a PE, price earnings ratio, of 11 to buy this company, and that's well over where it's trading now. And so AbbVie's PE, again, right now is about a 7.5. So they're trading at a 7.5 PE. They're going to pay an 11 PE to diversify their portfolio like crazy, which I think they need to do. It was my biggest concern from my last video that I'll link to in the description below that I did last year on this thing. My other big concern was I wasn't getting enough yield value to entice me into it. Now it's there. If it stays low like this for next few days, I'll get in, and I'll continue to average in if it stays low. I kind of going to approach this thing like I did with General Mills last year. It's going to be a newer position. I'm going to buy it, and then I'm going to maybe a little bit of a lump sum chunk, but then I'm going to average in. I anticipate it'll probably stay low for a while, hopefully so, but we shall see. So anyways, I'm just scrolling here through my spreadsheet as I'm going. I know this video is not as polished like my other ones, but we're doing all right. So Botox, I looked at Botox because that is the big drug at Allergan. It makes up about 28.5% of their total sales, so not too bad. And that's just of Allergan on their own. Combined company will be lower. And so I don't feel bad about that. I think they have a pretty well diversified portfolio. And what's interesting is these guys at Allergan, they're really clever on their patents. They did some wacky thing in the past where they sold a patent to an Indian tribe in an effort to prolong the patent. And so they do these clever things. And they did, with Botox, they don't have a patent on it, they have a trademark. And the reason they did that is trademarks never expire. And so they're treating Botox this weird way where they don't worry about this 20-year patent cycle that so many drug makers have to deal with, like AbbVie does with Humira. And so it's just interesting. But that being said, Botox already does have a competitor called Jeuveau, Jeuveau. Apparently they've copied the Botox formula, and Allergan's going after them. But we'll see how that plays out. I don't know. What I take out of that is Botox is kind of at a certain point or another at risk, just like Humira, where sales could be eroded by competitors. That being said, it's such a power drug, as is Humira, that I think they'll also continue to hold their own. And I think it's interesting how Allergan has kind of that trademark model for securing that drug instead of a patent. Anyways, at the end of all this, I did just a high level. I looked, what's AbbVie's total revenue in 2018? It's about 32.7 billion. What's Allergan's total revenue in 2018? Well, it was about 15.7 billion. So we're talking about $48.5 billion company in terms of revenue, looking at 2018. And then I just look at Humira, 19.9 billion out of that total. Humira is now down to 41% of the total. 41% of the total revenue, whereas it was at 60% before. Almost 61% basically. And so net, what is happening here solves the two major problems I had. The two problems I had were price. I wasn't getting enough value. I wanted closer to my 7% yield. And Humira, too much dependence on Humira. Now that the deal solves both of those, it brings up some new issues such as debt and a continued over-reliance on the broken U.S. healthcare system. Look, I'm already exposed to that though. So the debt's the main factor for me here. The broken US healthcare system, I already have a huge exposure to that through J&J and through Pfizer. And so for me, am I willing to live with the debt to buy a company, AbbVie at least right now at a 7.5 PE with an 11% dividend increase the last time and a compound annual growth rate 5-year even bigger than that, payout ratio of about 50%? Yeah. I think all of the risk is priced in there, or at least most of it, and I believe I'm getting a solid value here, and this is going to be a nice 41st stock in my portfolio, so I'm just so excited about that. And yeah, I didn't expect this to happen, but that's how dividend investing is. I wouldn't have expected that this thing, after dropping so much, is down another 16% in a single day. I look at it as a gift. It's just a gift from above. I'm really thankful for that. And look, I hope it stays low here because, like I said, I'm not in a position now to react in real time. I'm going to wait till I'm home. I'm going to wait till I can do my trading from the comfort of my home. I don't like to trade when I'm on the road. I just don't feel good about doing that on my phone or on like a hotel computer network. I don't personally believe in signing into like brokerage accounts, for example, or financial accounts unless I'm in a really secure location. And so for me, being in a hotel, I'm not going to log into my broker account and make trades or do things like that. It just is not for me. And so we'll see. I think it's going to stay low. If it doesn't, I miss it. But if it quite frankly, if it doesn't stay low, I miss it regardless, because where I'm at from a financial situation now is I'm not going to be making a huge purchase up front. I'm going to do a chunk. I'm going to make a nice chunk, but I'm going to have to average in over time to build my position, just like I did with General Mills. And so what I'm saying is the thing kind of has to stay down here for a while for this to work out for me. That's probably how it is for you too, or a lot of people here. I don't have enough cash on the sidelines now where I could just go and buy a full position. Even if I did, I don't know if I'd do that, quite frankly, because what if it goes down more? I don't think it will, but this is one of those cases where actually I probably would, I would be happier if I could make an even bigger purchase up front. So I'm gonna put my best foot forward and do all that I can. But it will be one of those where it'll probably take me 6 months to a year to build the full position. And so we'll see what happens. Now, what's funny is this whole Allergan thing, it might not even go through. What if it gets hit down, it doesn't go through? Hey, at a 7.5 PE, I'm still happy buying AbbVie here, even with the concentration of risk in Humira. Now, I don't feel quite as good if the acquisition doesn't go through, but I'm assuming at this point that it will go through. Anyways, long video, guys. Thank you so much for watching. Put in the comments below, what do you think? If you appreciate this video today, I know it's a little more haphazard from the holiday in, but you know, if you appreciate Chingy, you appreciate good hip-hop music, share in the comments below. I love you guys. We're thriving. We're almost 30,000 subscribers strong. I'm getting, by the way, more questions than I can answer, but keep them coming. I will get to them. I apologize for the emails I'm not answering, for the questions. I will get to all of them. And so I love you guys. And before I leave today, in terms of a full disclosure, I am long. I own the stocks mentioned today. I'm long Apple, ticker symbol AAPL, Altria, ticker symbol MO, Johnson & Johnson, ticker symbol J&J, Pfizer, ticker symbol PFE, and General Mills, ticker symbol GIS, and AbbVie, I will actually be initiating a position within the next few days. So I own those stocks in my personal dividend stock portfolio. In terms of a friendly disclaimer, today's video is not investment advice. I'm not a licensed investment advisor. Today's video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult a licensed financial advisor first. Literally just sharing my journey here on YouTube for your fun and entertainment. Thank you so much for watching the video today. If you appreciate the video, you appreciate me staying up late at night, crunching this thing out in real time, please subscribe. That's the greatest way you can thank me. Keep up the support, everyone. I am blessed to have such an amazing community. I love all of you guys. Dividend investing. This is dividend investing at its best. It's honestly moments like this, quite frankly, where you've got a growth stock doing a merger that will probably benefit the company, has a huge starting yield that will only grow more. I like it. I like it. And so share in the comments below. Do you like it? Do you hate it? I love all the perspectives. It's just so interesting what's happening right now with this one. It just kind of came out of nowhere, quite frankly. And that's what keeps it interesting. I'll see you guys in the next video.